Welcome to Creamer Media's Resources Watch, a weekly roundup of the events and people making and shaping the news in the mining industry. This week, South African miner Gold Fields wants a 20% profit margin irrespective of the gold price. AngloGold Ashanti is studying projects worth $2 billion in South Africa. And diversified miner Exxaro is exploring iron ore options on 3 continents. JSE-listed Gold Fields will re-engineer its operations in order to achieve a minimum 20% profit margin across the group after all operational and capital expenditure.
In terms of our philosophy of showing an increase in margin for shareholders after all capital, that margin's gone from 13 to 15%. We're not satisfied with that, and what we want to achieve as a team is to get that margin up to 20%, irrespective of the gold price. We believe that we need to generate an NCE margin, that's after all capital expenditure, after all operating costs, of at least 20%. And why is it 20%? Well, that enables us to fund dividends. We are one of the largest dividend payers in the industry, and that's another record we intend to hold on to. And secondly, to make sure that we can fund the very important growth projects that we have ahead of us.
AngloGold Ashanti Chief Executive Mark Kutufani says the group is looking at 2 20-year to 30-year gold projects in the West Wits and Vaal River areas in South Africa.
The Vaal River and the West Wits, both of those areas are very important. So we're looking at fairly significant projects over the life of the projects, probably in excess of $1 billion in each area to develop, but that adds probably somewhere between 10 to 20 million ounces in terms of recoverable gold over the long term. So they're long-term projects taking the life of those operations in the 20 to 30 years range and keeping us a very strong contributor in South Africa. So very important, very central pieces to our 2 regional strategies, and as I said, we want to be producing gold in the long term in South Africa.
Exxaro is continuing to look seriously at iron ore and is studying opportunities on 3 continents. CEO Sipho Nkosi says the group's entire strategy into the iron ore market includes the leveraging of unique beneficiation technology.
We continue looking seriously at the iron ore business. We are looking at a number of options, and there's quite a number of them that have come our way on the continent of Africa. Some of them in South America and some of them in Australia. So we're evaluating all of them, and as soon as we come to a point where we're comfortable that we can invest in any of those, we'll let the public know. We have some technology like UHDMS that we use in separating medium in iron ore, that we think, if introduced, could help a great deal in releasing more value on the iron ore side.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.